Imagine owning so much of something that you could control its price worldwide. In 1980, two brothers from Texas almost succeeded in doing exactly that with silver. They drove prices from $6 to $50 an ounce, made billions, and then lost it all in a single day that almost crashed the entire financial system. This is the story of the Hunt brothers and the greatest commodity manipulation attempt in history. Meet Nelson Bunker Hunt and William Herbert Hunt. They were the sons of H.L. Hunt, once the richest man in America. Their father made his fortune in Texas oil, and these brothers inherited not just wealth, but an appetite for massive, ambitious bets. In the early 1970s, they became convinced that paper money would lose its value. Inflation was rising, the dollar was weakening, and they wanted to protect their billions. Their solution? Buy silver. Lots and lots of silver. Why silver and not gold? Gold was already expensive and heavily regulated. Silver was cheap, around $6 per ounce in 1973. Better yet, silver had industrial uses in photography, electronics, and medicine. The Hunt brothers believed silver was undervalued. They started buying, not just paper contracts, but actual physical silver, bars of it. By 1979, they owned an estimated 100 million ounces of silver, about half of all the deliverable silver in the world. Think about that for a moment. Two men controlling half the world's supply of a precious metal. As they bought more, the price naturally climbed. Other investors noticed and started buying too. The price went from $6 to $20, then $30. By January 1980, silver hit $50 an ounce. The Hunt brothers' holdings were worth over $4 billion. They have made a paper profit of billions. People around the world started melting down their grandmother's silverware to sell it. It became economically viable to extract silver from old X-ray films. The entire silver market was in chaos. But there was a problem. The Hunt brothers weren't just investing. They were cornering the market. A corner happens when someone controls so much of a commodity that they can dictate prices. Other traders who had sold silver futures contracts faced disaster. They had promised to deliver silver at lower prices but couldn't find any to buy because the Hunts owned it all. This wasn't just about making money anymore. This was market manipulation, and regulators were getting nervous. The exchanges fought back. In January 1980, new rules were announced. They called it Silver Rule 7. Traders could only liquidate positions, not create new ones. Then came the real blow. Margin requirements increased dramatically. This meant the Hunts needed to put up much more cash to hold their positions. The price started to fall. $30, $20. The Hunt brothers needed to come up with hundreds of millions in cash immediately. They started selling other assets, but it wasn't enough. March 27, 1980. A date that would be remembered as Silver Thursday. The Hunt brothers couldn't meet a margin call of $100 million. They defaulted. Silver prices collapsed from $21 to below $11 in a single day. The Hunt brothers lost approximately $1.7 billion. That's about $6 billion in today's money. But the damage didn't stop there. Their broker, Bache Halsey Stewart Shields, was on the verge of bankruptcy. If it failed, it could trigger a domino effect throughout the financial system. The entire market was at risk. A consortium of banks organized an emergency bailout. The Hunt brothers were forced to sell off assets, including oil fields and a massive ranch. They eventually filed for bankruptcy in 1988. Nelson Bunker Hunt, who had once been worth billions, famously said, "$1 billion isn't what it used to be." But the impact went beyond their personal fortune. New regulations were put in place to prevent such manipulation attempts. The silver market changed forever. and the Hunt brothers became a cautionary tale taught in every finance class. So, what can we learn from this? First, you can't corner a market forever, especially when regulators step in. Second, leverage is a double-edged sword. It magnifies gains, but also losses. Third, even billionaires can lose everything when they're over-leveraged. Here's what's fascinating. Today, in 2024, we're seeing silver and gold prices rising again. Some investors are calling for another silver squeeze, reminiscent of what happened with GameStop. But the Hunt brothers' story reminds us why this is so difficult and dangerous. The Hunt brothers weren't evil villains. They were investors who believed in their thesis and took it too far. Their story shows us both the opportunities and the dangers in commodity markets. Markets have memory. The regulations created after Silver Thursday still exist today. When you see silver or gold prices rising, remember, behind every price movement is a story of human ambition, fear, and greed. The question isn't whether you can move a market. It's whether you can control what happens next. Thanks for watching Historical Finance Journey. If you found this story fascinating, subscribe for more incredible tales from financial history. Do you think commodity manipulation is still possible today? Let me know in the comments below. See you in the next video.